Taxes on Social Security for a single person. All right, it's been a while since I've done a video on this, so I want to go over a case study. We'll do single, then we'll do married. I had a lady the other day call me, and we're talking. She wanted to hire me, but it wasn't worth it for her. So I gave her some quick advice, and she's on her way, which is good. Now she's on Social Security, all right, and she's like, I got $250,000 in my 401k. Now she's married, and on my Subscribestar live stream, I went over the case study of a married couple. Right now, we're going to go over the case study of a single person, though, just to make it fair, if you will, and then I'll go and do another video for married as well. Anyway, so she has $250,000 in her, we're going to say IRA. All right, she's 67 years old. And she's making $2,500 a month on Social Security. All right, so let's use that. So $250,000, making $2,500 a month, Social Security, and she has a $600 a month pension. Or no, it's $500, but it's a $6,000. It's $500 a month. All right, so she has $250,000 in her IRA, and she's 67 years old. All right. So what she was wanting to do was she was wanting to move all that to a Roth in one fell swoop. And I was like, don't do that. And I'll share with you why. And the reason we don't want to do that for numerous reasons. Obviously, if she does in one fell swoop, she's going to get killed tax-wise. And I just said, don't. Now, she wanted to do that so she could buy silver. And I said, man, look, I don't care. I said, but I don't even know if you can hold the actual bullion inside a Roth IRA. I don't know. So I said, why not just take it out on a regular basis and use the proceeds, pay tax on it, and then buy the silver outside of an IRA, if that makes sense. Instead of having the restrictions on the IRS, rules and regulations when it comes to IRAs, why not just take it out? Because you got to take the money out of your IRA at some point. I don't care if she buys silver. I mean, she can do whatever she wants with the money, but I don't even know, I imagine you could probably own bullion, the actual physical bullion inside an IRA. Seems to me that's an awful lot of work to do. Why not just buy it outright in your own account, or just take the money out of your IRA and buy it out from JM Bullion or something like that. All right. So the issue that we have, though, is still if she were to take $250,000 out, she's going to pay a significant amount of tax. So I think I was able to convince her not to do that. So I want to go over this. So she has $3,000 a month in income. All right. $3,000 a month in income, of which $6,000 is from pension and $2,500 from Social Security. So what we're going to do is we're going to figure out how much of her, and I'm just telling you, she pays no taxes in this regard, but I've done this 1,000 times, I know. So we're going to figure out what her provisional income is. Remember, it's a two-step process to figure out your taxes. One is you got to figure out how much of your Social Security is subject to taxation. And the way you do that is you figure out provisional income first and foremost. So let me get my, here we go. So what we're going to do is she has $36,000. We got $30,000 Social Security, $6,000 pension. All right, so what we do is we take half of this and we say that's $15,000. All right, so half of her Social Security, add it to this pension, $6,000 to get your provisional income. Your provisional income is half of your Social Security plus all other income to include tax-exempt interest that you have. You get your provisional income. Bear with me. I'm going to show you what this means. So her provisional income in this case is $21,000. All right. Now, for a single taxpayer, if your provisional income is less than $25,000, none of your Social Security is subject to taxation. In this case, her provisional income is $21,000. Thus, none of her Social Security is subject to taxation in this thing, right? So provisional income is $21,000. You can have $25,000 of provisional income. None will be subject to taxation, which means when she goes to file her taxes, her AGI is $6,000 because none of her Social Security is subject to taxation, which means this entirety of the $30,000 doesn't go to the 1040. Well, it goes to 1040, but just it won't go to line 8B, 7B, I think it might be 7B, 8B, about taxable Social Security. So if her AGI is $6,000, her standard deduction, I think, is $13,000, which means she doesn't owe any taxes. Zero taxes due. All right, but so I was like, look, why don't you take some money out of an IRA while you have no taxes due? All right. So what we want to do here is we're going to say, okay, so if she's going to take money from her IRA, that's going to increase these numbers for provisional income, which might increase her taxes. All right, so remember, if she has $36,000 a year in this regard, no taxes. All right, none. I hope that makes sense. But now let's have her take $30,000 from her. Let's do $25,000 for simplicity. $25,000 from her IRA in order to buy the gold or the silver. So we're gonna do. Let's see if that works. $25,000 from her IRA. There you go. IRA. All right. So now we got total income of what's that? $61,000 total income. All right. But for provisional income, we still take all of her pension money, all of her IRA distributions. So we have $250,000, $25,000, 10% of it's coming out, plus half her Social Security. So again, we only taken half of this. All right. So now we take as $40,000. She has $46,000 of provisional income. Now it gets a little bit dicey. $46,000 provisional income. The first $25,000. So the first $25,000 is not subject to any taxation. The next $9,000, $25,000 of 34. 50% of that is $4,500, and now she has $34,000. She has $12,000 left, which is 85%. All right, so let me just go over this. Her provisional income is $46,000. How did I get that? You take half the Social Security, which is $15,000, plus any other income she has, which is her pension, and in this case, her IRA distribution. That's your provisional income. Now, of your provisional income, what we're trying to figure out is how much of that provisional income, how much of that $30,000 a year Social Security is subject to taxation. And the provisional income is what makes this happen. So a lot of people default and say 85% of your Social Security is subject to taxation. That's simply not true. It might be true, but it might not be. In this case, so $46,000 is provisional income. $25,000 is not subject to any taxation at all. The next $9,000, $25,000 to $34,000, half of that is going to be taxable as income, her Social Security. And then the next amount, 85% of that, and I need my trusty calculator, $12,000 times 0.85, $10,200 is subject to taxation. All right, so in this case, we got $14,700. That's how much of our Social Security is subject to taxation, $14,700. All right, so let's bear with me just a second. So now we erase all. Let me just wipe that off again. We got $14,700 is her Social Security subject to taxation. All right, so we know $14,700 is Social Security subject to taxation, plus her $6,000 pension, plus that $25,000 she took from her IRA. What we're now trying to figure out is her adjusted gross income. All right, so in that case, I'll probably need my trusty $20,000. Let me just get my trusty calculator, make sure I'm doing it right. We got $25,000 plus $6,000 plus $14,700. So her AGI in this case is $45,700. We're going to use a $13,000 standard deduction, and she has $32,700 of taxable income. Now we look at the tax brackets for a single tax person. The first 9, we're just going to say $10,000 for simplicity, is 10%. And then the next 20. Okay, and the rest is 22,000 will be subject to 22,700 to 12%. Yeah, because 22% doesn't hit, so you get 40,000. Okay, cool. That's our age. Okay, good. So now we have that's $1,000 of taxes there. 22,700. 2724. So she'll have to pay $37.24 in federal taxes because she took that $25,000 distribution. So what that means is she was before had no taxes in a 0% tax bracket. All right, so now with taxable income of $32,000, she's in a 12% tax bracket, but she had to pay $3,724 on a $25,000 distribution. Remember, because before she did the distribution, she paid no taxes, none whatsoever, which meant none of her Social Security was taxed, by the way. But now that she did the distribution, that made $14,700 of her Social Security subject to taxation, plus the $25,000 she took for the IRA distribution. All right, so basically what happened is by her taking $25,000 out of her IRA, she increased her taxes by $7,700. I hope that makes sense. That's a big deal because she had no taxation on Social Security. Well, now $14,700 is taxed on Social Security. Before is nothing. Plus, she still has a $25,000 tax she has to pay on her IRA distribution. So by taking $25,000 out, she increased her taxable income by 58%. Because it wasn't just $25,000 that's now taxable as income. It's this plus that. Because before she was paying no Social Security tax. I hope that makes sense. It's so important. So $37.24 is her taxes that she has to pay on $25,000 distribution. So even though she's only in the 12% tax bracket, she has to pay a 15% tax rate. That is 15%, $37.24 on a $25,000 distribution. That's an effective tax rate of 15%, which is crazy. And I mean, this is how the situation gets really cumbersome if you're single. And I'll do it in a married here in just a second. The same thing will be less painful. That's the problem with taking money from IRAs when you're on Social Security. All right, so now let's say she did, we'll do $40,000. It's going to be easy to do. So we'll erase all this. Oops. Maybe I'll stop there because we're at 12 minutes. All right, so I'll come back and do a $40,000 one. Hold on just a sec.